In the meantime, Nestle Nigeria's full-year profit after tax rose by 33% to 16.3 billion naira, while revenue was up 22%. We cross now to Lagos, where Wole Famurewa is standing by with the company's CEO, Martin Woolnough. Wole.
Yeah, thanks a lot, Alicia. As you mentioned, Nestle did put out those very, very interesting numbers. Joining me in the studio to discuss them is Martin Woolnough, the CEO of Nestle Nigeria. Thank you so much, Martin, for joining us on the show. I want to really focus on the fourth quarter because we saw about 20% growth in turnover in that quarter. And of course, the profit line also received a very significant boost in the fourth quarter. So what was the story exactly? What boosted performance in the fourth quarter?
I think first I should comment on the profitability because it's something that refers to the whole year. The Nigerian government, as you know, provide a pioneer status for businesses that are investing into the economy in a productive way, which the government see that's really adding value to the economy. And through the approval of that through the NIPC, we actually received in the fourth quarter that really big boost to the operating profit. And we're talking about the program starting from 2010 or mid-2010 through to the whole of 2011. So that all of that additional relief came into Q4.
Right. But we did see some pressure on the profit line from the cost of raw materials. And can you comment a bit about that and how you were able to work through that in 2011?
Yeah, profit. Actually, let's talk about that in another way, if I may. But the raw material pricing is always moving, and I think over the last 2 or 3 years we've seen this volatility, and it probably isn't unusual now. It's not something which a business has to say this is unusual. I think we've come to understand, especially now in relation to food products, that some products will move up and down. For Nestle, if you look at our operating results, obviously with the around 22% growth. At organic growth versus around 17 in real internal growth. The differences in price is what we've managed to recover for price, but that's much lower than some of the increases. And the second reason we manage that is through a substantial process of cost recovery and improving our business.
Now let's look forward, 2012, and I think I want to start with the investment you made in the Flourgate factory and what we should see as an impact of that in your revenues going forward. You did allude to the fact that you will be exporting from some of the output from that factory. Where are we on that?
Well, we started exporting last year in 2011, and we achieved around 1.7 billion naira of export sales. Have to say also that's again only been possible through the government's initiative with the export subsidy grant, and that makes us a competitive enough exporter. Without that, frankly, we wouldn't be competitive enough. So we must say that that's a particular policy again that works. And last year we would probably export to, well, actually quite a few countries in Central West Africa. This year we continue that, but also we shift a little bit more towards Angola. And we're talking all Nestle to Nestle exports, which is very significant because we have a significant number of factories in the region, but we're pleased to be able to contribute to that now.
How are you reading the Nigerian consumer today? We know there's a lot more pressure with the increase in fuel prices. Some government authorities are alluding to an increase in energy prices as well. So a lot of pressure coming in, and a recent report suggests that poverty is still a big problem in Nigeria. How are you reading the consumer, and to what extent is that impacting on your strategy going forward?
The answer to the question I have to give in two parts. So firstly, because our business is food and we're continuing to do well. So we're still performing, and you can continue to expect a strong performance in 2012. But we should not overlook the 6-day strike in January, which has a big impact on marketplace. We shouldn't overlook the difficulties in the north of the country in particular, and even in the south, it's still not gone away. It's just been precluded by more difficult issues in the north. And this makes it very difficult for people to have confidence to walk out in their normal day-to-day life. On the other hand, we are still in base food products. So talking from a financial perspective and as a business perspective, we have to remember food is something that people do use regularly, and with products like Maggi, which are going into consumer products, Milo, which is a breakfast use as a strong product for people to use for nutrition, and so on, and Golden Morn, which is our third leg, strong leg, and then of course our nutrition product range for infants and breakfast cereals, so and baby food. So at the end we're not isolated from those problems, but we are there to serve, and we have a range of products that are extremely focused on what we call popularly priced products. In other words, to serve the needs of the normal person, not just the rich.
Let's talk a bit about your raw materials, and I think That's one area that I think I'm quite excited about. You get a huge chunk of your raw materials from Nigeria, and we know that the government is on a real drive to get many companies to backward integrate, especially food companies. We've seen that a lot of that happen in cement, for instance. Yes. Give us your thoughts on the government's policy along those lines.
Well, to answer the first part of your question, actually we are 100%. We have soy, sorghum, maize, cocoa, palmolene, all of that is coming from 100% from Nigeria. In packaging, paper products is also 100% local, and much less so coming from some of the other packaging products where we're still looking for the quality to improve, so that's something for the future. If you're going to grow your business and double it every year, every 2 or 3 years, then you need to grow the volume of those products. For us to do that, we have to go and work directly with farmers. We call that CSV, creating shared value, where we want the stakeholders in our business to win-win. And what that means is we're creating initiatives which even the government are looking at. And let me give you one example, if I may, on cassava. We were importing, or we still actually do import, around 5,500 tonne of cassava of starch from abroad. And we decided to do something about that by working with the International Institute of Tropical Agriculture with a funded program for 2 years to actually supplement all of our requirements from local cassava starch production. So we're working directly with all the stakeholders, with the processors, with the farmers, about nearly 500 farmers, planting 30 hectares at our cost with IITA, with their expertise on how to grow bigger cassavas, teaching, training the farmers, and really pushing the agenda to the point where we're actually becoming a bit of a model as well. We do the same in grains, in grain development. Mycotoxin is an issue with grain storage, which is like a mould, which is very bad for health, and ultimately that needs to be worked on as well.
All right, a very quick comment, because I really have to wrap now. On the guidance you're giving the market for 2012, turnover should be about 112 billion naira, PAT 12.8 billion. So pretty flat performance is what you're anticipating in this year. But on the dividend side, what should we expect? We've seen your dividend policy change a little bit. It's down to about 60% of earnings this year. It came down last year as well. But historically, we know it was closer to 100%. Very quick point.
Okay, our policy is we don't have a policy per se, but this year we've decided, or in 2011, to keep our retention for earnings, which is in the interest of the shareholders, to reduce loans. In 2012, obviously we'll see that as that comes through to the end of the year, but historically the company has rewarded the shareholders with closer to 100.